What's up, everyone? We are not live today, but thank you for stopping by. We would like to say thank you to everyone who stopped by for our 10th episode live. If you missed it, you can watch the replay, but we just want to say thank you for everyone who showed up. I think me and Mo are planning on doing this again sometime here in the future, maybe the 15th episode, 20th. I don't know. You guys comment below. Let us know if you enjoyed that live episode, if you want to see us do this more often. But I tell you what, if you guys can get us to at least 500 subscribers, we'll do a live and do a bunch of giveaways. What do you think, Mo?
Yeah, we'll even up the amount. I think last time we did $50 in total.
Yep, $50 total. Yep. So we're gonna up it as well as potentially have some additional giveaways. So get us up to 500 subscribers, y'all. Share this video, share this video, share this video. And obviously, if you're brand new, by the way, my name is Mark. I have a YouTube channel called Trading with a Dummy, which I think you guys should definitely check out. And to my co-host is.
Hey guys, my name is Mo, and I run a Discord where I trade live for options trading.
Yep. So, and we do this on a weekly basis. This is therapy for us. We just really enjoy this. So thank you for joining us, and thank you for being here today, because I know you guys' time is valuable. So thank you for stopping by. So without further ado, let's go ahead and smash that subscribe button first. Of course, click that bell button to get notified every single time a video drops. And of course, get a thumbs up if you enjoyed this video. But for real, let's get into our topics for today. The first thing I'm going to do is I want to apologize to everybody out there. A couple of weeks ago, actually 2 weeks ago, I spoke about a dividend plays, specifically another group that was pitching the REIT for a mall, and I suggested that wasn't a good idea, which I still don't think is a good idea. But then I went over a few other dividend stocks, one specifically that I really liked. I'm going to pull it up right now, and that one is, which I was invested in, by the way. It was SBLK, which is Star Bulk Carrier Corp. Now, this has a dividend that's like ridiculously high. I'm talking about, man, it was what? Oh, it's now 31%. Dividend yield. I like this one. I was invested into it initially around $26. I told you guys I usually always goes between 24 or 26 and will jump up to 30 some dollars. But this was a momentum dividend. I was very specific about that. And I said, this is a dividend play you have to pay attention to, because it does move like a growth stock. So it can drop significantly and it can rise significantly. Now, little did I know, in the past 5 days, it's down 16%. And in a month, it's been down 33%. Now, there's a lot of people saying that this is a great time to buy into it because it is significantly undervalued. But like I said, this is the yield. This was a momentum play. This is the reason why I liked it before. I've been investing to it for a while. I was getting the dividends, but I did exit out because it dropped significantly lower than I expected. And I think it could potentially now at this point go to the $16, which was a 52-week low. And that's the reason why I just want to say, hey, most people out there don't apologize when they call out something and it ends up tanking. They'll just ignore it. They'll just take the tweet down, they take the Instagram down, and they will never, ever address it. Nope. Here, we're all about transparency. And I bragged about Star Bulk Carrier Corp, and it completely backfired. So, but yeah, you guys do your due diligence on this one. I may re-enter it. We'll see. Again, this is a momentum dividend stock. It has 31% dividend yield, which I think this is actually incorrect. I think it's in the 20s, not in the 31s. But also, real quick, I wanted to kind of cover this real quick. The holdings channel, if you guys are unfamiliar with this website, you can type in any stock that you're interested in, and you can see which institutions and hedge funds actually hold it. For example, you can type in Apple, and it shows you the top owner right there, Vanguard, and then BlackRock. I just did SBLK, and as you can see, there's a ton of different institutions that are invested in it, but a lot of them you probably never even heard of. I mean, Morgan Stanley we've heard of, Goldman Sachs, of course, but Oak Tree Capital Management holds majority of the shares, and I have no idea who they are, and they look into them. But this kind of gives you an idea like which institutions actually are invested into the company, and keep an eye on it. So that was pretty much it on that part. We just want to apologize. Well, I just want to apologize for calling out a crap stock, which I was hoping was going to be a beast for you guys, especially if you're in the dividend play. Again, I mean, if you have the risk tolerance, by all means, go for it. I'm going to look at it around the $16 range again before I get.
Can I say something, Mark?
Sure. What's up, man?
So, back in 2020, when we were buying stocks, we would look at who owns it. So we'd look at how many funds own it, what's their ratio, or is it going up or down?
Yep.
You might want to do the same thing now, but it might not be good if a lot of funds own it. I'll explain how. If Apple goes to 96, let's say, or 95, what do you think the funds are going to do with stocks like this? They're going to liquidate them, and they're going to tank very hard. Like and I don't even know what the stock is. Like, I know you've talked about it, but if Apple goes to 96 from what it's at 140-ish now, something like this could go to $5 to $7 if 2 or 3 big funds start liquidating it. And the percent that you're looking at for dividend, like 31%, it's going to keep going up because the price of the stock's going down. And what ends up happening is we saw that around 2020, they're going to start cutting the dividend payment to match the price of the stock as well.
Correct. Yep. And that's what I was saying before. Like, this is a really high dividend, so you have to be very careful, because the minute they take that away, the stock is going to definitely go down. But I mean, I was looking into, because I was trying to see like what was the news on SBLK for it to dump like this, and it's just shipping is a shipping company of dry goods. There's a lot of issues happening right now, iron, all this other stuff. So it's not the time right now. So I still think it's a pretty good company, but there's a lot of headwinds right now for these shipping companies. Because if you look at all the shipping companies, they're all down. So this is not just an exception. This is definitely one of them. So, but that's all I got. So you ready for the breaking news, Mo?
Yeah. So
this is Channels Television's breaking news.
Dude, you forgot about the insert. You
Yeah.
forgot all about the insert now. All right, all on you, Mo. Go for it.
All right, that's cool. Okay, so I want to talk about the macro, then I want to talk about what traders should do and how they should basically anticipate and how should they react to this. So FOMC are minutes that are released from the previous meeting that is done. The reason why we look very carefully at the minutes is sometimes more information is added, right? So the market sold off to around 3,600 last FOMC, and everyone today was waiting for the minutes. The minutes were supposed to come today at 2 o'clock. And what we're looking here on the minutes is we're looking if anything's changed. If nothing's changed, we've already accepted that and the market's already reacted to it. So what happens? People that have hedged their accounts, they're going to start selling their hedges, which is going to run up the stock market, right? So you need to know that going in. Now, people that are smart and have played the market for a while, they understand that the first 4 or 5 hours of the FOMC, there's chops. So you get a good volatility about 10-15 minutes before FOMC, and then the real move comes after. So I woke up, figured out that the market's going to be flat, but no, the market starts dropping. So I added an IWM hedge. We made about 100% on it, sold it. Hedges are supposed to be kept, but you're up 100%, sell it. Went back, took a nap, came back, market flat, nothing really happened. And here's where you have to be very smart. You need to know what you're waiting for. If you're just like blindly waiting for the minutes to come, not knowing what you're looking for. So we were looking for 2 things in the minutes. One was, are they going to talk about quantitative tightening? Like, to what aspect? Numbers? They didn't talk about it. Are they going to talk about an interest rate increase, which they always do? So they did talk about it. Last time Powell spoke, he said they're looking at 0.75 and possible 1% increase. The numbers that came in today were between 0.50 to 0.75. So again, we've already digested the news and sold off. Market's forward looking. So if you were holding hedges, you're going to start selling. You start selling, the market maker needs to start buying to balance. We've talked about this last episode. So what happened? Market ripped. And again, I put screenshots like what Mark says, always give proof. Screenshot on Discord, Twitter, Instagram. We added SPX at 350, sold at 13. That went up to 17. So that was about a 400% increase. What I'm trying to tell you is, yeah, you understand the macro, but you need to anticipate what might happen and what happens if A happens, what happens if B happens, because you need to react to both situations. I wasn't blindly waiting to buy calls either. If they came up with a rate increase 1 or 1.25, I would have gone into puts. The reason why we do drop and rise after the FOMC, I think for the first 10-15 minutes is because, and this is something that I didn't know and I learned it from my mentor, is there's algos trading and they're trading based on news. So what they're watching for keywords. And as a keyword is released, they start buying or selling. So you have to be very careful getting in and out. You have to almost wait for the move to happen for you to get into something. So we waited for the sell-off to finish. The moment it finished, I added calls. Now, my calls went up 50%, then down 50. couple of times, but I had to hold through the storm for you to ride it, because there's nothing in the minutes. Yes, the minutes were super negative. Like if you watch Twitter, it was like recession is coming. They're already assuming recession. Fed's taking. None of that matters. What did I say? Like none of that matters. If it's a repeat of what happened last time, we've already priced that in. If something changes, you look, is it good or bad? If it's good, you could buy calls. If it's bad, you buy put. But if nothing changes, you look at calls too, because we've already sold off on that piece of news. Yeah, that's basically how I would anticipate. That's how I'd play it. And you want an if or scenario where you can be ready for both the parts.
So Mo, I would ask you this question: seeing that the minutes came out, because I totally missed all of today's action. You hit me up and you were like, "Hey man, how was your day? Did you take part in the action?" I did not. I had a terrible morning. I got got wicked in the futures market, so I've been off my game for the past 2 weeks. I don't know what's going on with the futures with me, and futures has been off my game, so I shut it down and I moved on with my life for today. So I definitely missed all the good action, but I did see the room and stuff that you were posting. But question is, since there wasn't any, I guess, different news in the minutes, do you anticipate that now that the market's going to drop? I mean, it rallied, right? Because it's basically saying there's no change. It rallied. But do you think that it's going to end up tanking again?
No, I don't. I think we get to 4,015 first before we tank. And you can use as a gauge. Look at what crypto is doing today. Look at what oil is doing today. If we start selling oil, that's a very risk-on situation for a growth stock. So if you go look at Snow went from 130 to 150. You're going to want to watch stocks like SC Net. I think tomorrow might be a consolidation day. But I think we have another about roughly 200 points for us to go up before we start tanking again. Now, what a lot of people don't understand is there's a lot of flow coming in for puts. That's just the funds. They're going to add in puts, and they're always going to be in profit because they're adding August, September, November, December. So yeah, they might go down 20, 30%, but with the sheer volume they add and the amount of money they have, they keep averaging down or rolling up or down. That's stuff you shouldn't be watching when you're trading. You need to watch what's happening this week, what's happening today. So that's so to answer your question, I think we rip before we die, also because of seasonality.
Yeah, they said July historically is actually a positive month. So it's usually a good month. But once we get to OPEX, I would say that that's where I would probably anticipate some selling happening.
Yes, sir. OPEX, CPI numbers. So their earnings starts in around July 15th. Next week, I think we're going to go pretty bad in terms of, you'll see people that can trade both sides. You're going to see highs and lows. So the rip is another 200 points, which could take 2 days, which could take 3 days. So it's not like we're going to go 44 or 4,500.
Yeah. So, all right. Be careful out there, everybody, once again. All right. Let's get into the tickers real quick.
Write it down and keep it for future reference.
As you guys know, we drop basically a post on our Instagram. I'm going to start doing it more often on our Instagram, which is Trading with the Dummy and Moses OTB Clubhouse. So definitely follow us there if you haven't done so yet. We're going to start dropping these questions saying, hey, which tickers do you want us to cover? Because I'm more of the investor. He's more of a trader. So we do both, but, that's more my strong suit versus his side, which is more on the trading side. But we're going to cover these tickers, which is the ones that people asked me to cover. So I'm going to pull them up real quick for y'all. And remember, there is no paywall. So don't ask me, hey, I cannot pay you to give me the entryway. No, just, respond on the post and we'll cover it. So this week, let's pull it up and let me hide myself real quick. All right. So the first one that was asked was Tesla. I know everyone keeps asking about Tesla. Now, we've mentioned it multiple times. I think it's going to go to 550. I think Mo even mentioned before that he thinks it's going to go lower. And this is how we got these prices. This is on the weekly demand. I actually have $395 to $441. That's on the weekly demand. But the reason why I was calling 550 is because Tesla is a little bit different than most stocks, right? It has hit these levels 1, 2, 3, 4, 5 times. It has tested these levels 5 times, which is close, which is actually 540.83. So $540 and Jesus, $83. Man, I am like messing up with my speech today. But that's a happy medium. That's also where the 200-day EMA will be located at. And that's the reason why I just kind of rounded up to 550. And I kept saying 550. Now, if 550 does not hold, this can definitely go down to $395 to $441. That's the first one that was asked. The next one was we already covered Google, but they asked me what would it be the price for Google's split. It's just divided by whatever the split is, which I think is 20-1, right, Mo?
Yeah, it's 20.
Yeah, so I kind of just gave you guys an estimate anywhere from $89 to $94 is where I'm expecting it if it ends up splitting and going down. Because historically, yeah, you may have a run up for like a week or two right before the split, but once it splits, it ends up pulling back somewhat. So this is the levels that I had. Again, this is the same ones I had on the monthly. I went down to the monthly, and again, it's the same one. I just split it for 20-1. Next one was Square. Everyone keeps asking about Square. Actually, Square currently is in one of the demand zones. If you go to the weekly, I'm on the monthly at this point with Square. But if you go to the weekly, you can see that is actually currently in a small demand zone. But I'd rather go to the monthly. The further out, the better, the more accurate. And I think we're going to end up hitting $42.46 to $52.51 on the weekly demand. I don't know what to say about Square, man. I mean, it broke every single support level all the way down. I joked about this months ago. I did a chart and I had $80 as like my go to hell price range, and it broke below that. Is at $64.97 right now. So this is a crucial level. It is a support level where it's currently at. So if you haven't scaled into Square yet, again, I'm not a financial advisor, but if I want to get into Square, this would be the time that I would start adding some, because the earnings is coming up here on August 1st. I'm not sure if the earnings is going to be good or not. Someone asked me for TQQQ, which is more, I don't know why you would want to buy TQQQ. I'm assuming they meant like for like option purposes or whatever.
No, they want to buy TQQ because they want to leverage on QQQ. So it's 3x QQQ leverage. So
exactly. But why would you buy shares in that though?
Because they would go up much more. Like, so if QQQ goes up by 1%, TQQ would go up by 3%.
Yeah, but it's so cheap. Look, it's so cheap. It's like at $26.
Yeah.
I mean, I guess if you guys are curious to know what the demand is for that one, it's between $19.64 and $7.59. I'd rather just go for QQQ. I prefer that one. It just makes more sense to me. But I mean, I'm guessing you may be on a budget. I like TQQQ for trading purposes. That's the only time I ever really go to it but for investment side, I'd rather go to the QQQ, which is I have a demand at $268.97 to $279.72, which has already hit. For the past 2 weeks, I have bought shares in that, just to be very transparent. AMD has a support level at $72.15. It did hit that. I got in on a play. I actually spoke about that. I think it was in my private little group. I ended up doing a call on that $75 call for July 15th. I completely botched that one, so I did not. I was looking for basically to exit out at $6. I bought it at $2.44. But I guess I bought on Friday. On Tuesday when the market opened, it had dipped so low in the pre-market to $71 that it hit my 20% stop loss that I had put in place. So it automatically kicked me out, and then it went up. So that kind of sucks. But this is a crucial level. So $72.15. Like if it honestly, if it falls below the $71, it's dangerous territory. It can go anywhere down from $48.86 to $53.87. And that was pretty much it. That is all that they asked for, so that's what we got covered right there. Your thoughts, Mo, on any of this?
I'm gonna go over the Tesla chart because you talked about the stocks. I'll show them where I'm looking to short Tesla.
Okay, and just real quick, I want to share one more thing. No, we could do that afterwards. Go ahead, Mo.
Are you sure? Okay.
Yeah.
So I do a lot of one-on-ones with the people in the mentorship group, and one of the questions that keeps coming up is, hey, how do you set up your chart? Like, let's say you're fresh, brand new, you're trying to learn how to pick up a ticker or how do you trade a ticker. I'm going to walk you through on how to do that. So let me show you the chart. So let's get to Tesla because Mark just covered Tesla. So the question we ask is, well, Mark said this is kind of where the level is going, but you want to know if you're trying to trade, where do you start buying puts? Because you want to buy the shares. What if you can, let's say, put $1,000 short it, make 4 or 5K out of it, and use that money to buy stock? How would you do that? So first thing I would do is I look at larger time frame to know what's going on. Let me just delete this so it doesn't get in the way. So the first thing I do is I look at key points, right? I'm looking for areas where this has failed, and it's a very strong area. So right away, I see a supply at 765, and it goes all the way to 745. Believe it or not, 20 points is a very good number on a daily. Usually, these things can go 50, 60 points. So I like that. What else am I looking for? Then I identify a trend line. Again, guys, I do this every day. I do about 40, 50 charts a day. So I just see stuff right away. So I hope you guys take your time with the chart. So I see this trend line. We failed it once, twice, 3 times. And this is not technically a fail because we never broke above it. We're still connected to it. So this is a valid trend line, and we're approaching very close to it. So once I have that, I'll go on a shorter time frame. So after a day, I usually go in an hour because 4 hours is not going to show me anything different. 1 hour is perfect for trading too. Like if you're looking into August calls or puts, I'm looking into August puts for this play. And this is going to help you on why you should not take certain trades. So now let's look at this, okay? We've got a big trend line, which is roughly, let me mark this for you guys. It's roughly 705 to break. So you can enter this trade at 705, but just know that there's a supply that starts at around 733. So you've got roughly about 28 points going. And if you, let's say, get in tomorrow and this happens, you can make 400 or 500% on this. But if this consolidate, this is not worth taking. But this would be how you would take this trade. So if you're preparing for tomorrow, wait for 705. 705 breaks 733. This is my plan. Again, not a financial advice. So I'm looking at 733. That would be my trade. After 733, I'm going to leave runners. 80% of my position, I'll be out of it. In terms of shorting, I'm looking to short this around 750, 760 area. I'm looking at a 500 put for August. OPEX, which is, let me check quickly. Okay, so August OPEX would be around 19th August. So I'm looking at 500, 19th August for this. And what would happen? So let's say we get to 750, 760. These are called easy laid back trades. I'd enter at 750. If it breaks 760, I'll be out. I'll probably lose around 4 to 5%. If this trade, however, works, though, I'll make anywhere from 400 to 500%. And it's not going to be a trade where I have to constantly watch it. This is my profit target for this 627. At 625, I will sell 80%. I'll leave 20% in case it fails. If this fails, we're going to get to the levels Mark is talking about. Not like close to 450, but you'll see around 550, 500. That happens, this play goes to 1,000%. So that's kind of how I would trade. And you can grab any chart and do the same thing. So I went 1 day, 1 hour. You should go 1 day, 4 hours, 1 hour, 30 minutes, 5 minutes. But I just showed you because I'm looking at a long put. I don't want to get too short. Sorry, not too short, but I don't want to look at a shorter time frame. But this is kind of what I'm clean trend line. You've got a supply on multiple levels. You've got a resistance here. Now, let's talk about this. What if you want to play a put from here if the market goes down? Personally, I wouldn't play the put. I'll explain you why. You've got a 1 hour demand here. Then you've got a demand here. Now, let me go take you to a 5 minute after this. Let's go 30 minutes. 30 minutes not going to change much. Let's go 5. So you've got a demand here. You've got a demand here. You've got a demand here. So 1, 2, 3. So too much going on. Level above are pretty clean here. All right, that's it for me, Mark. Any questions, I'm free to answer.
Yeah, see, and that's another thing, just on the fundamental side of things. There's a guru out there right now. His name is Meet Kevin. He's on Instagram now, like heavily active, and he's telling people to buy Tesla right now again. And there's talking about, there's so much great news coming out. I'm seeing the opposite. I keep track of Tesla because I am interested in buying Tesla at 550. I mean, they just literally laid off people, and I saw that they closed down some of the factories temporarily. So I don't know what news he's talking about that's so positive for people to jump in right now. I mean, I know people are fanboys when you get married to stocks. You just cannot let anything change your mind. Hence, which is going to lead into what I'm going to talk about here next.
Mark, can I give you my 2-minute rant on this? And I brought it up on the Instagram too. A lot of people aren't stupid. They know the market's going to go down. So now the question you ponder is, why are they talking about it? And the answer is engagement. A lot of people are sitting on cash or are worried, and they love this kind of content because if you're holding Tesla stock, the last thing you want to do is listen to Mark saying that it's going to 450 or 500, because that's going to piss you off. Most people will like, what the hell, I have so much money. But then there's this guy with a lot of following, and he's telling you it's going to go up. So it does get the engagement, but overall, you're going to lose reliability. And that's what's going to happen with a lot of people. A lot of this happened with crypto. At a Wall Street analyst, she retired now. She does a finance, something like teaches people. And she said, hey guys, start buying consumer staples. They are very good to buy at recession. And like my head spins when I hear stuff like that, because you have to understand we're not even in recession. Once the liquidation starts happening, you're going to see the real selling happening. If that happens, no matter what you own, maybe Walmart goes down from 150 to 100. It won't be like UPST 500 to 50, but still, like, you need to know that, right? I don't think Walmart's going to zero, and overall, if you bought it, you're going to be positive. But knowing these facts is important, because if you've never invested and you listen to someone who says they're false Wall Street analyst and they're saying that you'll buy this and it's going to go up and it goes down, you're going to end up losing money because you will sell, because you don't have the stomach and you don't know why you bought it. So be very, very careful buying stocks right now. I don't know what more to say to that. If you are doing dollar cost averaging, building for the future, you understand you don't need the money, go do all those things.
100%.
Yeah,
100%. Now, again, like I hope we're wrong. I hope that the market does not go down further. Trust me, we're not trying to just be negative. I'm really hoping. My portfolio looks like shit. I want the market to go up, but the reality is, it's just there's no indication that it looks like it's going to have some crazy run up yet. Just yet. That's just me, especially Tesla. People think I hate Tesla. I just don't. I think it's very overvalued. I think it has a cult-like following. I think eventually it will come down to reality with the price where it should be once all the other EV cars are officially out there and they have a better infrastructure. I think the stock definitely will come down. I will buy at 550. I think it's going to go to 3. If we're going to be totally honest, I think it's going to go into 300s by the end.
Do you Do you know the top analyst for Goldman Sachs said today that Apple, if we get a recession, goes to 86? If Apple goes to 86, where does Tesla go? Because Apple's one of the strongest leaders out there, right? And yeah, my target for Tesla is around 350. I think that's where it goes. But you're right.
I don't think Apple's going to go to 86, though, man. I think that's just an analyst trying to make a name for himself, say something controversial.
But he's not wrong, man. If the SPX goes to 2,900, that's exactly where it goes to. Go look. Every single investor believes in Warren Buffett, right? You believe in Warren Buffett?
I think he's an amazing long-term investor. Yes.
Okay, so do you know he has a recession indicator which takes the total value of all the private companies divided by the GDP. Based on that, I'll send you the chart so if you want, you can post it with this. Based on that, we are at 150%. To all that, the number that I give you, total number of stocks listed privately divided by GDP. According to him, we should be at 75 to 90%, which means we have another 60% drop coming. This is just not one. There's a million indicators all stating the same things. But anyways, we're running out of time. So go ahead, Mark, do your thing.
Yeah, man. I'm just gonna finish this up real quick. Might get a little bit in depth in the future here. Just give you guys a quick idea of, I got an argument with some people over Palantir. Everyone's married to, well, not everyone. There's also a cult-like following of the stock Palantir, PLTR. And in someone's comments, I usually don't do this, but in someone did a video on it, and I saw all the fanboys in there talking about, oh, you're boring, you're a boring investor, this and blah, blah, blah. Like Palantir is this great company, all this other stuff. And the thing is, most people don't know what Palantir does. I do. I work in intelligence career field. I am very, very familiar with Palantir overall, what it does, what it's capable of, and I don't like it. Now, to say that the software company is shit, no, the company is good. The software itself is good. The company is not good. I think people need to understand the difference. You could have a great product, but the company on the stock level does not mean that the stock is worth buying at that price, if that makes sense. For example, which one can I give an example? Oh yeah, Honest. Okay, Honest, I think is at $2-3. Honest, the product is good. I love the diapers. I love the juice boxes. I love the stuff that they offer, cleaning supplies. But the company itself is shit. Like, I would not invest into Honest ever again, which I did, by the way, in the past, but I would never invest into it, because if you look at it and you look at like just the business, how it's ran, the numbers and etc., it doesn't justify the price, which was I think $18 or $20 at one point. And the same thing with Palantir. Just because you like the company does not mean that the stock is worth buying or the company is worth investing into. And anyways, people were saying, oh, I'm just talking crap. The owner said that the company is going to 20x sometime soon. And they keep going back to, well, Tesla was an anomaly. Tesla's something completely different. Palantir is just a software company. But anyways, you can go to sec.gov. You could type in any stock ticker. We can do Palantir. You can pull it up and you see all the filings, the 8K to 10K, proxies, ownership, and etc. And you could just go look through all these files. I like to look at the 10K, all right? The latest one was May 9th, 2022. When you click on it, it will give you the whole rundown right here with a bunch of bullet points. One of the areas I like to pay attention to is the risk factors. What are they facing? All right. And again, remember, everyone was arguing me, telling me, oh, the owner said Palantir is going to 20x in the next 2 to 3 years. The first thing they have here, line 1, we have incurred losses each year and we may not become profitable in the future. We may not be able to sustain our revenue growth rate. Our sales efforts involve considerable time and expenses, and our sales cycle is often long and unpredictable. Please explain to me why you believe that this stock is going to be profitable in the next 2 to 3 years if they haven't been profitable in 20 years. I'm not saying the company is crap. I'm saying the stock is crap. The software is amazing and does a great job of what it's intended to do, but the company itself, it is not worth investing in. Me personally, I will buy it at, just for fun, I will buy it at $400 or $500. I have no problem buying 100 shares because that's $400 or $500. I spent it on bad trades before. I'll do that, and I will ride it up when there's a growth sector that when things go in a bullish territory, I'm sure it will go up quite a bit, probably to $14, $15 max. I would sell it all at that point. I don't think it's worth more than that. But that's just me. I think for every single stock, you should do research. Open up to the 10K on sec.gov. Everyone has a file there. You can see, if you pull up Apple, you will see a complete different story. Anything, Mo? That's pretty much all I had.
No, man, I'm just going to say, like, when market's expensive and let's say you're looking for a house, you don't have a lot of choices, right? Because everything's expensive. Same thing with stock market. When it was high, people were just buying whatever they could that fit their budget and everything shot up. Now the market's shit. So you want to get the best stocks because they're all on sale, right? So I don't know, unless you know Palantir better than other companies, you can go for it. But there's so many other good stocks.
There's so many better ones that you could marry to, because I literally I know several people who invested almost their entire life savings in Palantir when it was over $20 and SoFi when it was at $18. Look at where they're at now. And it's embarrassing to always hear the argument, oh, well, look at Tesla. Tesla is different. Stop comparing every shit stock to Tesla.
I had over 1,000 shares of Palantir at 28. And I got out at 25. This is way before we actually started dropping. Palantir was getting sold off so bad. I lost a lot of money on them because the person that I was working with at that time, they were pretty big on Palantir, and they said, like, based on everything they know about the sector, it's gonna go. But dude, every time it went around 20 or 30 area, it would just sell off. And that's a good sign of a shit stock, where people are just unloading, they're offloading their stocks at 30. That's where the supply was. Next time it went to 28, I started selling, and around 25 was all out of it.
Yeah, you guys just have to do research. Don't just listen to these YouTubers who are fanboys of Palantir or what some article writes. Actually look at a 10K. Look and see how many people are invested in the company itself. I think Palantir, last time I checked, it was like 72% was owned by retail investors. That's not good. That's not good at all. That means that majority of people are like, actual companies are not invested in it like you think they are. Typically a healthy balance is anywhere between like 40 to 60. It's usually a healthy balance. But I mean, if a majority of the people who own Palantir, retail investors, I don't know, because eventually if it goes to $2-3, it will look ugly. So do your DD, look into the companies. And if you don't even know what Palantir does, like actually what it does, not what the CEO says, but if you don't know what it does, maybe you shouldn't invest into it. That's all I got. I'm done with my rant.
Awesome.
So, all right, everybody. Again, we went a little bit over time, 6 minutes. We're trying to get better at this. So thank you for tuning in. Once again, y'all can find me on my YouTube channel at Trading with a Dummy. You can also find me on Instagram at Trading with a Dummy. On Twitter, Trading WA Dummy. Now, I have a lot of people who are making fake accounts for some reason of me. I do not sell anything. I'm not going to ask you to invest money into some strategy that I have or crypto. That is not me. It's Trading with a Dummy, full-fledged. To you, Mo, where can they find you?
Simple. Instagram, OTB Clubhouse.
That was it? What about Twitter?
They follow me on Instagram. You'll find me on Twitter too.
There we go. All right, guys. So until next week, peace out.